Hello traders, this is Fawaz, other market analyst for City Index. Today is the 29th of July, so the markets are looking quite interesting, and in particular gold ahead of a major week for economic data, and the Fed is meeting as well this week. We've seen the precious metal break its bullish trend line that has been in place, or that had been in place, I should say, since the start of the year. This trend line is what I'm talking about. This trend line has been tested multiple times, but this week we are trading below it following the breakdown on Friday. The precious metals has also broken below its support trend of this triangle pattern that had been in place since the precious metal made an all-time high back in April at 3,500. Now, looking at the hourly chart, you can see that gold is testing a potential area of resistance here. This zone had been support on a number of occasions in recent times before it broke below it on Monday. So this area between 3,330 to 3,340 zone is significant. It needs to hold below this area for the sellers to exert further pressure and remain in control. If gold were to break back above this area, I think that would be a bullish development. But I think, going back to the daily chart, the precious metal will need to reclaim the broken 2025 bullish trend line before things start to look bullish once again. Now, going to the longer term charts and looking at the monthly time frame, you can see that the precious metal is on the verge of creating its third doji candle in as many months, after failing to break out to new highs during the past few months. With the RSI also at above 85, the precious metal is indeed at extremely high levels. The RSI does need to unwind from these levels either through time or price action. By time, I mean if we get a consolidation around current levels or a slight correction, that will allow the RSI to unwind from these levels back to more normal levels. However, if we see a big correction, that's what the bears will be looking for, right? That will also cause the RSI to unwind. So it can happen through either price action or time. The bulls obviously want to see RSI to unwind from these levels through consolidation rather than a sell-off. Nevertheless, there are lots of support levels that could provide a floor on the way down, but we'll cross that bridge if and when we get to those key levels. But for now, on the daily time frame, the key level to watch is that 3,300, marking a very important level. Below that, we have the June low at 3,247 that will come into focus next should 3,300 break down, and then below that 3,200 is the next level I've marked on the daily time frame. But significant support levels are way lower near the 3,000 area, where the 200-day moving average, for example, converges with previous resistance and also the longer-term bullish trend line. Now, the US dollar has pressed further higher today, causing the euro dollar to extend its losses from the previous day when it fell around 1% on the back of the EU-US trade deal, which was seen as being negative for the European Union, obviously, but positive for the US, both in terms of the obvious reasons in terms of tariffs, but also because of expectations that the tariffs will boost inflation and that will prevent the Fed from cutting interest rates significantly. And this week's meeting on Wednesday is expected to see the Fed hold interest rates, but the key question will be, are we going to see any signs that the Fed is leaning towards a cut in September? That's the key question. But if the Fed turns out to be a bit more hawkish and doesn't provide any significant hints of a cut in September, I think that will push the US dollar further higher, and that could cause a further dent in the euro dollar chart. For now, support is being tested between 115 to 115.50 area, the shaded gray region, where previously we had seen some resistance before we broke above it in mid-June. This area was tested initially in mid-July, and now we're back to that area once again. And this time we've seen the breakdown of a key trend line that had been in place. If I draw it back here on the chart, we've also seen the breakdown of the 116, 117 support levels that were obviously now taken out, which could now turn into resistance. So those are the key levels to watch on the upside. But in terms of the downside risks, the key level now is that 115 handle. Below it, this low comes into focus at 114.46. And if we go below that, then there's nothing significant until this shaded blue area where the highs from September 2024 and July of 2023 converge with between 112.15 to 112.75. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.